The S&P 500 down 0.10%. The NASDAQ 100 flat for the day. TLT 20-year bonds up quite nicely, 0.84%. Gold up 0.36%. Let's jump into these charts, give you a comprehensive review and forecast. Remember, last trading day of the year is on Monday. Typically, it is a down day for the NASDAQ. We'll wait and see how things shape up. Let's jump into these charts. We saw a nice big down candle for the week, even though there was a huge bump about midweek in the marketplace going up. We continued nonetheless to see the sentiment be down. Things crossed over all the way back on the 12th of October, heading down, sideways a little bit there in November, and then dropping off in December. Again, down candle for the week. Derivative oscillator gaining downward momentum. Price percent oscillator still heading down quite strongly. Sentiment in the market is decidedly down. We look at and that's on the weekly chart. We look at the 2-day chart. What do we see happening? Well, we see that as things closed on Friday, we have a green spinning top on the 2-day chart. That means indecision on that intermediate chart. Indecision tending up, but quite a bit of it's almost a doji. Derivative oscillator losing downward momentum. That price percent oscillator is pretty much flattened out. So we do have things sliding sideways on that 2-day chart. This is where you'll really see what's happening as far as in the short term on the 4-hour chart. We have that pullback underway. Somebody told me in an email I shouldn't be calling it a pullback. What I'm talking about is, and they're right, I should probably say a reverse. It is a reverse in the downtrend, which is what we want to see happen, and that is underway. And again, that is the reverse that we need to see in the 4-hour chart before we can find a jumping in point. Now we see that the day ended with a red open box candle. Again, bit of a pullback there in the up movement, which is, again, what we want to see happen. Derivative oscillator still gaining upward momentum, price percent oscillator heading up. But if we see over the course of this next week a reversal and a crossover going down on that 4-hour chart, pull the trigger on a practice trade for a down move, since the 2-day and the weekly are still in confirmed moves on the down play. Now, this is a little different than our typical method that we like the best, and that is when we have weekly vertical crossovers going down. Hasn't been one in a while on the S&P. Things are still in a confirmed down move, so be ready to pull the trigger on a practice trade on a down move. That is an inverse play, so you would look at something like SH. If this comes to fruition over the course of the next week, do a practice trade on that. It's an inverse fund. It actually moves in the opposite direction. So all this up movement over the last many days has been reflected in a price change on SH. Typically, it's a lot smaller. The numbers are for shares in SH, but it tries to move. The people who run the fund try to have it move at the same percentage inverse to the S&P 500. You want to know more about what we're talking about when we talk about being a little sophisticated, and that is when things are going down, what to do. Well, of course, you wouldn't buy SPY. You would buy the inverse of SPY. Just as easy to do as buying SPY, and we want you to practice that. And again, we're not a stock calling service. We're not giving you market advice, telling you we are not in any way. You're not paying us for market advice. We're not giving market advice. I want you to practice. Get good at this, and then and only then, after you do all of your other studies and you make up your own mind to spend your own money, once you can consistently make smart moves, then you might consider doing that yourself. But we are not calling it. Okay, that's where we are on the S&P. Let's go from there to the Qs, which was flat for the day on Friday. But again, another strong down candle. Derivative oscillators losing a little bit of downward momentum. Price percent oscillator still heading down. We go to the 2-day chart, and this is the second up candle that we have. Again, we had a green up candle, solid green, which again is not the strong open box green. We ended the latest 2-day candle with the price percent oscillator pretty much flat, derivative oscillator losing downward momentum, and a green spinning top means indecision tending up. We go from the 2-day chart to the 4-hour chart, and we can see 1, 2, 3 days of up movement. And we see the derivative oscillator gaining upward momentum, price percent oscillator. So the reverse is underway. Once things rotate back over, if they do, remember the 2-day and the weekly are primed for a down move. And what would you look to do a practice trade on? You could try something like PSQ. That is the ProShares short of the NASDAQ 100. And it, of course, will move inverse to what the NASDAQ 100 is doing. So right now, the NASDAQ 100 is moving up. So PSQ is moving down. And when it turns back around, then, of course, PSQ will go up. And again, they try to match percentage for percentage. So good to practice on that. That's where we are as far as stocks go. Let's jump into bonds before we run out of time. Up 0.84%. Remember, we had that weekly vertical crossover back on the 30th of November, going up in bonds, and things continue to move up. Caution a little bit is we do see that we had a higher prior movement on the wick that prior week, but again, things still moving up. Green up candle, derivative oscillator, price percent oscillator heading up. We go to the 2-day chart. What do we see there? We see things again trying to keep tracking up. This latest 2-day candle is a green, a rather large spinning top. Again, don't like seeing that wick on the bottom. Shows some weakness in price movement, but the price percent oscillator is heading up. Derivative oscillators losing upward momentum. We look at the 4-hour chart. What do we see there? 4-hour chart continuing just to slog along. And again, sort of tending down if you drew a trend line on that, continuing to be weak. Again, what are we waiting for? Crossover going back up. If indeed that occurs on the 4-hour chart, that would be your jumping in point over the course of the next week for an up move on TLT. Lastly, we go to gold. Don't we love gold? 0.36% up for the day. Gold crossed over going up way back in October, back on October the 5th. Somebody asked me when our last weekly vertical crossover was. That was on TLT back on the 30th of November. Now, gold, we see the derivative oscillator gaining upward momentum, price percent oscillator continuing to rocket up. This is a nice candle for the week in gold and our Heiken Ashi candlesticks. We look at the 2-day chart. What do we see there? Again, continued up movement. I don't like how, again, we're sort of topping off in the up movement on the wicks there, but price percent oscillator heading up, derivative oscillator gaining upward momentum on that 2-day chart. What's going on the 4-hour chart? Well, we see things again continuing to move up nicely. Told you to pay close attention. Look how well things have done since we had that crossover in the morning on the 4-hour chart back on the 20th of December. Jumping in point somewhere around the 118.60. And again, quite nice. The high in the afternoon, 121.08. That's rather nice over just a few days. So again, keep your eye on gold. We like to see the 4-hour chart working. If you remember in the past, for a couple of years, it was our total trading chart. And again, gotten a little slippery over the last year. Maybe that's coming back. We'll keep our fingers crossed. Hope that happens, folks. That's where we are. We've been fulfilling your orders on the book, Charting Your Way to Wealth. You can see in the show notes attached to everything we put out, the link to purchase the book, also to purchase the Stock Traders Journal that we have available. And of course, if you want to help us out at the end of the year, be a Patreon supporter. Been reaching out to those guys here over the last few days. Just sent another email out to one. We would love to have your support there. Follow the link to Patreon and help us out. We've got lots of great rewards for that. Don't forget on the 31st, New Year's Eve, what are we doing? We are ending the year with our quarterly chart review. And if you are a book purchaser or a Patreon supporter, you're going to get that. And we're going to be talking about what this latest candle forming up means, what the price percent oscillator means, where we are, what the market's doing, the magic of this chart going back 20 years would have gotten you out of the market crash starting there in the year right at the end of 2000, 2001, would have got you into the run-up, would have gotten you out of the 2008 big down market crash, gotten you back in 2011 for this latest run-up. We talk about the Trump effect, and we see what's happening now. If you want to know more, become a Patreon supporter, buy the book, We appreciate you. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.